Hello and welcome back to All Things Money. My name is David Blain and the host for the show, and today's show is devoted to the President Obama's 2013 budget proposal, and specifically the implied tax law changes that would be required to execute his budget, and so how that affects you as the taxpayer out there. We wanted to give you some information on what's being proposed as well as how it may impact you. If you missed the first two segments, head on over to our website, dlblain.com. We'll have archived copies up there in a week or so. You can catch up on what we talked about. So the first two, we really went through the proposals and what they are. During this last segment today, I want to talk about how they impact you as a taxpayer as well as society in general. And the first comment I'd like to make is just kind of general in nature. This is tax time, and when you go to pay your taxes and fill out your 1040 or your CPA, or if we do your taxes, I know a lot of you out there listening are clients of ours, it comes down to real dollars. Is how much do I have to pay in real dollars, to the IRS? And when you do your home budget, it comes down to, okay, how much money do I have coming in? How much money am I spending? And one of the most frustrating things is when government talks about budgeting, they talk about things like baseline budgeting and things like that. And what it means is that when they talk about budget cuts, they're generally talking about decreasing the rate of growth. If you're spending $1,000 a month on your house and you say, honey, at the kitchen table, or, we've got to cut our budget. We need to reduce our expenditures. The house, maybe that's not a good example. Let's say you're spending $200 a month eating out. And you say, honey, we've got to really cut our budget. You may say, well, let's only spend $150 eating out. Well, when the federal government and a lot of states propose a budget and they say, we're going to have a budget cut, what that means is instead of increasing their dining out from $200 to $225 next year, they're only going to increase it to, say, $210 a year. And that's considered a budget cut. Unbelievable. It's just ridiculous. The same thing with his baseline. And so you see in his proposal, talk about baseline budgeting and things like this. To me, it's all politics. It's all hokey, phony accounting. They get credit based on the budget revenue and letting the Bush tax cuts expire against the baseline, and it's just a big mess. So I want to stay away from that. You can read up on that yourself. I just ignore the baseline budgeting and things like that, talking about tax savings to the federal government, because as long as you've got big government politicians, whether they're Democrats or Republicans, we're going to keep spending more money. So I want to focus on the tax rules and how they affect you. So the 28% limitation, that's a big one. Capping or eliminating these itemized deductions on income that in the higher income brackets. Once again, these are you'd be able to only shield income at the 28% or less tax bracket. All itemized deductions, including charitable contributions, home mortgage interest, state and local taxes. If you don't think that proposal is going to affect charitable giving, if you don't think that a proposal is going to affect the housing market, I mean, you're crazy. It is. It is going to help it. It's going to hurt it a lot. The same thing as I already mentioned. Employer-provided health care, municipal bond interest, all those type of things, retirement plan contributions. I mean, he's proposing to eliminate all those deductions for higher income taxpayers. I mean, frankly, I wouldn't mind working our way into eliminating them across the board, but to just eliminate them for a segment of the population, you talk about fair share, you talk about targeting, discrimination, it's absolutely ridiculous. And to target those deductions to only the higher income taxpayers, you're going to see effects because they're the ones that give away the most money. They're also the ones that are the largest purchaser of municipal bonds. I mean, what do you think that's going to do to the borrowing cost of state and local municipalities? Also, what do you do with the guy that bought a muni bond this year that bought it because they said it was going to be tax-free? and now all of a sudden that income, that interest income, is going to be taxed. I mean, you know, how do you do that? These proposals are in no way, shape, or form going to simplify things, and I think they're going to cause a lot of problems that are going to ripple out throughout society. It's that way with all these tax rules. That's why when they pass something, they try to target somebody, the AMT, oh, this is just going to apply to a few people at the top. Well, here we are, the year 2012, it applies to a lot of middle-income taxpayers. The tax code is too complicated for a bunch of politicians to sit in Washington, D.C. and figure it all out. It's just too complicated. Making a deduction dependent on the taxpayer's income to the extent of this proposal is really, sort of breaking new waters, and really is a discriminatory practice, and as I mentioned, just explodes the complexity of the tax code. It's also going to pick up and expose lower and middle income taxpayers to unintended tax consequences. It costs more to extend the Bush tax cuts for middle and lower income taxpayers than it does wealthy taxpayers. That's something you don't hear a lot about. Taxing the dividends as ordinary income items. Once again, this is a ridiculous policy. Corporations, dividends are not tax-deductible corporations. They pay tax on that money. They pay it out to the individual that owns the company, and then they have to turn around and pay tax on it again. It's just a ridiculous policy. In the estate arena, some big changes, removing some of the preferential items, especially with the grats, as I mentioned, that were the rules for defective grantor trusts really established in the 1950s, are really going to inhibit a taxpayer's ability to pass property to his heirs gift efficiently. And I think it's a real shame that even in death, people can't pass, their property on to their family. So anyway, it suggests that now is a really good time. If you think he's going to get reelected and some of these things are going to come to pass, now may be a really good time to look at taking some capital gains, maybe a good time to look at gifting money away under the current rules and take advantage of the over $5 million exemption that currently exists. So anyway, I hope this show was useful. If you have any questions on this, feel free to give us a call, 252-633-0107. Otherwise, we will be here same time next week. We hope you can join us. So for All Things Money, I'm David Blain.
The proceeding was a paid program. The opinions expressed are not necessarily those of WNBU and Inner Banks Media.